Is Nick Bennenbroek, head of currency strategy at Wells Fargo Bank. Welcome, Nick. Always great to see you.
Good afternoon.
So those comments from the Treasury Secretary, anything to do with the dollar's turnaround today?
No, I think it's very much a coincidence.
Okay.
Certainly, the words we heard from Mr. Rothman were relatively standard. We've heard those over the past several years, so there's other factors behind the dollar today.
What about the president's impending trip to China? I guess he's on the way as we speak. Could we see a trading impact from there?
Possibly. I don't think we're going to see a very short-term impact in terms of the dollar's moves over the next week or two. But what we might see, for example, is the Chinese currency, a renewed appreciation there. Indeed, it's quite interesting the central bank made some changes in its wording of currency policy. So maybe we'll see those forward rates moving. Is that troubling
to you if the yuan loses that peg?
No, I don't think so. Probably wouldn't want it to happen right now. I mean, certainly currency stability during the height of the crisis was a good thing, I think, Chinese currency stability. But we're moving on now, and I think by early to middle of next year, the global financial system is going to be strong enough to be able to absorb a more volatile Chinese currency.
Now, in our introduction, we said you're pretty bullish on the dollar. Is it anything more than the Fed finally having to raise interest rates?
Well, it is a little bit more than that. I mean, we think that the Fed will begin raising rates in the second half of next year, but we think it's basically a reversal of the trends we've seen in 2009. Very easy monetary policy. Lots of non-standard quantitative easing, for example, has boosted commodities, has boosted emerging markets, and has helped those currencies. And really, we just see a reversal of trends. Interest rate increases, reduction of liquidity, and some of those currencies that have done very well will actually start to lose ground against the dollar.
Yeah, but speaking of losing ground, we're still seeing the dollar losing ground for the year, but that's because the equity market is so strong, right?
It is, and we're still seeing this. I would call it a somewhat unusual relationship between this inverse relationship between equities and the dollar. I mean, we're getting very good news on equities, but it doesn't seem to help the dollar at all, for example. So
why not?
Well, again, I think at the start, or at the height of the crisis, there was very much this safe haven inflow and now this safe haven outflow. But we do think that relationship's going to weaken or soften over time. It doesn't make sense in our view, for example, for the economy to recover, for US equity markets to do very well, and for that never to have a beneficial effect on the dollar.
Right now, you don't see a classic safe haven relationship then?
I don't think it's a classic safe haven relationship. I think it's more of a fact that it's certainly not fear or that kind of stuff sort of overriding the markets. I think it's more just that when markets are calm, there are better investment opportunities elsewhere, but it's not the classic safe haven play, I don't think.
Getting back to the Treasury Secretary's comments, some people have suggested the administration, even the Fed, want to maintain a weak dollar, allow a little inflation to boost U.S. exports, erode the value of our deficit. Do you buy that argument at all?
Perhaps. I don't think I don't think they're that unhappy about a weak dollar. I don't think they're actively promoting a weak dollar as well. And there are limits as to how much I think they would really want it to weaken. So far it's been gradual. So far it hasn't really been too much of a concern. But again, we think the cyclical dynamics in terms of a reversal of liquidity, a reversal of some of the trends, I don't think it's going to have anything to do with currency policy per se. On the part of the US, it's just going to be a natural evolution of the economy and financial markets. And
the other issue of concern, perhaps, or maybe it's not a concern to you, is the carry trade being funded in dollars. Some are saying, oh, there's a bubble brewing here.
Well, that's possibly the case, but the bubbles will eventually reverse or pop. Hopefully, it won't be too jarring like we saw with the last financial crisis, for example.
Yeah, but Nick, last week we had the International Monetary Fund saying that the dollar is still overvalued.
Yeah, I don't know if I necessarily agree with that. Certainly, looking at the euro at $1.50, looking at the Japanese yen at 90, my own opinion would be actually the dollar's slightly undervalued. And the reason it's undervalued is because of these very easy monetary conditions we have right now. I think they'll reverse, and I think we'll see the dollar go stronger.
So in these APEC talks, what does Secretary Geithner say to assuage any concerns?
Well,
what does he need to say?
I think what he needs to say...
Yeah, right.
I think the thing that would be most powerful for the dollar right now would not so much be comments on the dollar itself directly, but he needs to outline a really concrete and credible plan to get this budget deficit under control. And I think if we saw that, the dollar would shoot higher.
You keep talking about monetary policy and the exit strategy. I'm curious if you have any thoughts on how we might see that unfold in the next year.
Well, we're starting to see it unfold a little bit now. The early stages of an exit from quantitative easing are occurring. The Federal Reserve is coming to the end of its treasury purchases and its agency purchases, for example. In Europe, the Eurozone, the European Central Bank is saying that it's going to discontinue its long-term liquidity operations. So the non-standard measures we see being discontinued in the first half of 2010, and then in the second half of 2010, we're looking at the Federal Reserve, the European Central Bank, possibly the Bank of England as well, starting their rate increases.
Any reason to be buying the euro right now other than the fact that it's not the dollar?
Probably not, in my opinion. You know, I think what we're seeing today is a hint of what we're going to see next year. At times, we're seeing some dollar strength, some market nervousness. Next year, I think it's going to happen more frequently, and we'd be selling the euro above 150, and we'd be buying the dollar yen below 90.
Have we seen $150 euro for the time being? Is that going to retrace before the end of the year?
I think we'll be back above 150 at some stage again before the end of the year. But really, again, in the big picture, I think we're going to see more frequent days like this of dollar strength. And any time we get above the 150 level, I would be a euro buyer.
Nick, what are we going to see?
Sorry, a euro seller.
What are we going to see when the Federal Reserve eventually moves on interest rates?
Well, again,
how's that going to affect the landscape?
Personally, my opinion there would be that I think what we'll see is that some of the currencies that have done really, really well, commodities, gold prices, for example, extremely high, oil prices extremely high, emerging markets doing extremely well. I think we'll see.
And that's where that safe haven conversation always seems to start, with gold.
Right, and I think what we're going to see, though, is that as that occurs, we'll see some reversal of equity markets. We'll see some reversal of gold prices and commodity prices, and we'll see a stronger dollar. So it's very much a case of, obviously, when we start raising rates, the financial market environment is not going to be quite as calm as it is today, for example, and that's when I think we'll see dollar strength and foreign currency weakness.
All right, so how do you make money on your outlook? What are the best currency pairings right now?
Well, right now, I would still not be. We would be looking at the dollar from a very long-term medium play, and we would be selling the euro above 150. We'd be buying the dollar yen below 90. That may take 3 or 6 months to come to fruition in terms of profitable trading, a profitable trade. There are some opportunities in the crosses right now as well. We would be buying the Australian dollar and selling the New Zealand dollar. We would be buying the Norwegian kroner, and we'd be selling the Swedish krona. And we'd also be probably selling the euro against the British pound as well.
Okay, near term, next catalyst to really move the dollar, shake it out of the range.
I think the next catalyst is probably going to be, basically going to be when we start to see announcements from the Federal Reserve, ECB, more concrete announcements that they're exiting their non-standard or quantitative easing policies.
All right, Nick, a lot of good stuff today, all on the dollar and currencies, foreign exchange. We sure appreciate your time and your insight.
Thanks.
Thank you.
Nick Bennenbroek is the head of currency strategy at Wells Fargo.